Hey guys, what's up? Alec back with the daily stock market, and look at that, up $34,000 in the past 12 months, $84,000 now, which accounts for around a 60% gain in the last 12 months. And year to date, we're already up $25,000 in the past 10 months. Now, in this video, we're going to be talking about earnings. Specifically, we're going to be talking about Netflix and TSMC, some of the two biggest and most important stocks in the whole stock market, and exciting stocks also. If you don't know too much about those earnings, make sure you stick through this video. We've already had a lot of banking stocks report earnings this week, and it's been pretty bullish overall. Citibank, PNC, we have Interactive Brokers. We also had ASML accidentally report their earnings a little bit early, which led to a huge fall in the stock's price, a 15% loss on ASML. So we'll talk about if that's a good buy, a good dip buy later on in the video. We also had Morgan Stanley report earnings, Citizen, US Bancorp, and many more also. We also have some banks reporting later on in the week. On Friday, for example, American Express, Ally, Simmons Bank, and a few others. So the trend could be bullish for those banks as well. If you want to get some hints on American Express, Fifth Third Bank, Ally Bank, look at some of these other banking stocks that already reported this week. We also had United Airlines report, which we absolutely have to talk about, up 13% on the day, 20% in the past week. And in the last 3 months, United Airlines, UAL, is up 63%. Holy cow. Now, I was talking about this stock all last year at around $35, $40 per share. So if you are a long-term subscriber to the YouTube channel, congratulations on making around an 85% return in the last 12 months just from watching the YouTube videos. We have UAL still at only a 7.7 PE ratio, a market cap of $23 billion, implying that it's still a good deal. We have the earnings per share at around $3.33. And UAL, I would say wait for a dip to buy. I think that UAL could easily go back to around $50 per share and cool off a little bit. And at this point, if you are up around 80% on your investment, 85%, then trimming some of the portfolio, at least in my personal opinion, is probably a good thing to start considering. Real quick, if we look over at their year-over-year income statement, we can see that they have been growing a little bit. Actually, in 2021 to 2022 was their biggest growth with an 82% growth. And then from 2022 to 2023, we saw a 19% growth. That was total revenue, not net income. Moving over to net income, it hasn't been as consistent as all. With 2022 to 2023, their biggest growth with 255%. And those are the two standout years. So that's why in the last 12 months, we've really seen the stock really picking up, is because of that big increase from 2022 to 2023. And if we look at a quarterly chart, we can see that their net income has been fairly consistent, with 1 or 2 quarters causing a little bit concern. All right, we saw a 28% decline in quarter over quarter net income, which is a little bit concerning. But their most recent quarter, 2024 Q2, we saw their biggest net income, which was $1.3 billion, which is extremely impressive. And in the last 5 quarters, we've seen their total revenue very consistent as well. So if you believe that a company like UAL could continue to grow their net income year over year consistently. Remember, we saw them do $4.2 billion in 2015, and now they're only doing $2.6 billion. So if they could 2x that and get back to $4 billion on net income, $5 billion on their net income, then it's obviously going to be a stock that's going to rise to around $100 per share or even higher. Another small concern is their balance sheet at 86% debt to asset ratio. So that's a little bit of a concern, but not a huge one, because we know that the airlines are going to be getting bailed out if any potential bankruptcy situations come into play. So balance sheet not as important to look at on airlines. Net income is singly the most important thing, and then the second most important thing is that total revenue. We want to see them growing quarter over quarter and year over year. But let's talk about Netflix stock because they are reporting earnings tomorrow, Thursday, after the close. Netflix currently at $702 per share, down 0.5% on the trading day so far. Right now it's around 11 a.m. at the time of recording. I'm located in California, so Pacific Standard Time. We see the stock down 2% in the past week with a downward trend continuing. In the last month, it's pretty much flat. Last 3 months, we see a bullish trend with a 6% rise. And year to date, Netflix has absolutely been killing it. 45% gain, which is very impressive for a large tech company, a mega cap company, to be growing their share price by that much. And if we pull out to the last 12 months, it's even more impressive, 97% gain with, Netflix as low as $350 per share this time last year. So a big question is, where will they be this time next year? Can they grow another 100% to around $1,400 per share? We see them with a big drop off in 2021 to 2022, around a 74% loss to $175 per share. That's when I was buying them pretty heavy and making videos to buy pretty heavy as well. From their low, they're up nearly 300%, which is absolutely incredible and one of the best rallies we've seen from any stock in the stock market, obviously besides like Meta and Nvidia being the biggest one and some of those other ones. But yeah, this takes the cake for one of the biggest comebacks in the stock market in the last 2 years from 2020 to 2024. Currently, we have them at a 44 PE ratio, which isn't the worst. It could be a lot higher, especially for a large market cap, something like a Netflix that has a huge moat. Okay, so 44 isn't totally overvalued, but it's getting on the bearings of being overvalued, in my opinion. And I'm not personally buying anymore for long term. I want to see them under $500 per share personally, which I don't think will happen anytime soon. But again, I'm a patient investor. There's no reason for me to rush into Netflix. I don't need to own Netflix stock. If it goes under $500 per share or to $500 per share, it'll definitely catch my interest a lot more at that point. I'll consider investing then. Now we can see that the earnings per share, the EPS, is expected at $5.11 per share. The last 2 quarters, it has beat those expectations, okay, but it's hovering right around that same $5 EPS target that it's had the last few quarters. So here is a good article that I was reading. I want to share it with you guys. Netflix earnings preview, analysts bullish despite a warning of unrealistic expectations. Several financial experts have further raised their stock price targets, but at least one question if the stock price has gotten ahead of itself given the gains so far this year. Netflix ended June with 277.65 million global subscribers after adding 9.33 million in the first quarter of 2024 and 8.05 million in the second quarter. Management has forecasted third quarter net additions to come below the year-ago period when it added 8.76 million. When the streaming giant reports its latest quarterly results, investors are once again keeping eyes and ears out for subscriber trends, the progress of the company's cheaper advertising tier, and other newer businesses such as Netflix game unit, for which it recently hired Epic veteran as president of that division, and possible insight on future moves. There's also rumors going around that they're going to be doing another U.S. price hike, which is obviously bullish for the stock overall and good thing for the investors. So that could even raise the stock price a little bit on that news. Heading into the earnings report, Wall Street analysts mostly remain bullish, with several further raising their stock price targets. But at least one question if the stock price has gotten itself gained so far this year. As one expert noted on October 7th, Netflix shares were, as of the day, up 12% since the streamer's second quarter. So here we see an analyst at JPM Morgan saying we remain positive on Netflix shares heading into the third quarter earnings while recognizing elevated expectations. Okay, but he stuck with his overweight rating of $750 price target on the stock. We remain bullish on Netflix's ability to grow revenue in the mid-teens and 2024 and 2025 and low double digits in 2026. Further expand margins and drive multi-cash free cash flow growth. Okay, another analyst, John at TD Cohen, in an October 7th note, similarly reiterates his buy price target with shares, but he boosted it by $45 up to $820 per share. Expect continued strong member growth and rising margins. So overall, in the short term, analysts are bullish on this earnings. There's a lot of expectations on Netflix, though, and if they don't deliver, the stock price could easily fall, and it could just keep going down and down if they keep missing those expectations continuously. However, on the flip side, if we just see Netflix do what they're expected to do over the next 1 to 2 years, then it could be a very bullish thing for the stock, and the stock price could easily go to around $1,000, $850 per share to $1,000 in the next 24 months, in my opinion.